Well, good morning. It is Monday. It is July the 15th, and I hope you are doing well. It's been a little bit since I gave an update, and with everything that's been taking place, I thought it might be a good time to take a quick look at that. The market has been on a tear this summer. You may remember in one of the updates that I did, I mentioned to you that April is typically a good month of the year, and this year April was a disastrous month. You always have heard the term about sell in May and go away, because typically over June, July, August, September into October, those are typically the worst months of the year to be in the market. And this year that has been exactly the opposite. When we saw that temporary bottom in May, we have seen a run in the markets up to, and to get real technical, two standard deviations above the 50-day moving averages. And what that means is the market is very extended. Now, we're also starting to hear a lot of talk about, well, we need to take a look under the hood because the indexes, the S&P 500, the Dow Jones Industrial, the NASDAQ, when I say the indexes, that's what I'm referring to, is the indexes have made it to record levels. I said to you that we were looking at a target on the S&P 500 at the end of the year somewhere around 5,700. Right now the S&P 500 is at 5659. That index is up just over 18% year to date. Now that would be good returns for a 1 year number, but that's just through the first 6.5 months of the year. The Dow is the sort of the lagger at 6.5%, but the NASDAQ, which is mostly technology type companies, that index is up just shy of 24% year to date. And all three of these indexes are trading at record levels. Now, the problem with this is that in order to go from, like for example, on the Dow, when it hit 20,000, whatever how many years ago that was, to go from 20,000 to 40,000, it has to do it 21, 22, 23. So to go from 40 to 60,000, it has to do 41, 42, 43. And so we get to these levels and we have a tendency to think, gosh, this is way overbought. It is extended to the upside right now, which typically means we might see a little bit of pullback. Now, the big conversation has been that it's the handful of stocks, the biggest stocks on those indexes, that are carrying the markets, and the rest of the companies that trade are really not performing. That has been true. Now, I bore y'all with advanced decline numbers. In other words, the number of stocks that are advancing compared to the number of stocks that are declining. That tells you the real returns in the market. And I also give to you in terms of point and figure charts, the 50-day moving average and the 150-day moving average. And those are good indications of if we pull the hood up on the market and look underneath to see what's going on. That tells us whether the market is strong or whether the market is weak. Now, I will say that, like the pundits are saying, the advanced decline numbers, the moving average numbers have been a little bit negative, and it's been a little bit worrisome, because a lot of times when the troops are not participating in the war, it's just the generals, that a lot of times you lose the war. And that's sort of been what we've seen. There's been a handful of companies that are carrying the indexes higher, and the rest of the market is not participating. Last week, though, there was a change in that. And as a matter of fact, just to bore you with just a few details, the number of stocks trading above their 50-day moving average on a point and figure chart has just traded up to 62%. So that's healthy. That's a real healthy market, or at least it's getting back to good health. So maybe we're not going to see that market correction, or the chances of it have lessened a great deal. Also, on the advanced decline line numbers, we are starting to see, especially last week, the number of stocks that are going up is much greater than the number of stocks going down. We want to see those trends increasing, and we saw that last week. So that's also a positive of note. Also, earnings numbers have come out. The banks have been somewhat mixed. They're a good barometer for the rest of the market, but we're seeing the earnings numbers for the second quarter now being reported, and those numbers have been really well. But now, still, the key thing that we're looking at is inflation, because interest rates have been driving this market. Any report that says interest rates are going up, the market comes down. Any report that says, oh, the Fed may be able to lower rates, then the market takes off. You know, we went from having 6 rate cut announcement in October of last year to now they're hoping that there's at least 1 rate cut in September. And I've said all along, I just don't know how the Fed can cut rates. Maybe they don't have to raise them anymore, but I don't know how they cut them right here anyway, because when I go to the grocery store, I still buy 3 or 4 things and it's $100 every time. And it's a whole lot more expensive now than it was 4 or 5 years ago. And so I don't see where inflation is helping. Now, the big question is that with the Trump attempted assassination over the weekend, what does that do to the markets? Obviously, it has not done anything to the markets, as the Dow is up over 300 points right now, and the NASDAQ is up over 200 points. The S&P is up almost 50 points right now. So it does appear that the Trump trade, as they call it, meaning that people are making their trades based on Donald Trump being the president after November the 5th, or January 20th, whenever he's actually inaugurated. And so the events over the weekend did not change what investors are looking at, but actually strengthen the Trump trade. One last thing. I did see a report over the weekend about the trillions of dollars that are, not billions, trillions of dollars that are sitting in money market accounts, savings accounts. When interest rates went up, CD rates went up, Treasury bills went up, rates went up, money flooded into those areas. If and when that money comes back into the market, it will be a definite boost to returns and the strength of the market. So here's the summary to just get to the point. This summer has been much better than what typically happens in summer. I am as caught off guard by it as anybody. Interest rates right now appear to hopefully be doing what they're supposed to do. I don't know what the direction is. I think they probably tend to stay in the same place. The earnings numbers look good, and there's trillions of dollars sitting on the sideline that at some point will come into this market and will be a boost to it. So to me, I think all of these things are very positive, and that we're going to do well in the markets, hopefully for the foreseeable future. With that said, as always, thank you so much for watching these videos. Thank you to those of you who share them with other people. I really appreciate it. And as always, thank you for letting us work for you. And if you have any questions or need anything, don't hesitate to call or come by. See you next time.